My name's Dan Jowett, and I'm the CEO at Open Markets. And welcome to this podcast where I get the opportunity to talk to some of Australia's leading fintech leaders. And today I'm delighted to be joined by Ben from AlphaNode. Ben, so I thought maybe you could just give us a quick intro about yourself and importantly about AlphaNode, because I think a lot of our listeners won't be too familiar with your business right now. I know they're going to be in the next few years, but you give us a quick overview.
Absolutely. So, look, I actually started out as a chartered accountant years ago, ex-Deloitte, and through journeys that are untold, I ended up in digital assets. And I think you see digital assets at different stages in your career, and you dismiss them based on what information is out there. And in 2017, I found that I could go down the rabbit hole deep enough and understand and have that aha moment of realising where digital assets were heading. At that point, we were, myself and some colleagues were being approached by so many people wanting to understand the market and how to get into it. We felt the best way was to wrap the opportunity into a fund. And so we launched one of the first digital asset funds in Australia that was focused directly around cryptocurrencies in 2017. And over the last 8 years, we've sort of evolved and, got additional AFSLs, ACLs, and really sort of bolstered out in the sector and looked at it towards the regulatory pathway that we see is now unfolding before us.
So 2017 makes you the OG, does it not, in digital assets? It feels like a long time to have been in that space. So you would have seen a lot of change happen. Tell us a bit about that.
Yeah, look, I think when I first got into it, it was definitely the Wild West. ICOs were very, very popular. It was that sort of boom time for those. Seen the rise and fall of exchanges, DeFi, scams, meme coins, all sorts of things that have happened. I think a lot of people say when they've been in the sector for a long time that 1 month in crypto is equivalent to a year in sort of traditional finance because it moves that fast. And I think that's one of the big challenges when you're in the sector is how do you keep up with the mammoth amount of development and growth that the sector is having. But look, it's been a fun ride, and I think as with any journey, as you know through your career, it's all about the people that are along the journey with you, and really enjoyed that.
Yeah. Now you talked about a couple of things there which I've spoken about before, and I think let's call it some of the problems and challenges that have happened over the last 5 years from fraud. Let's be honest, from meme coins that have no value, people losing lots of money, AML issues with some of the major players. That's not what the industry has needed and has caused some challenges for those that are trying to steer down a much cleaner regulatory pathway. Those like here at Open Markets, where we come from a really heavily regulated sector as a clearing member of the exchange, broad AFSL. And as you touched on, Ben, you're wanting to go out with regulatory clarity. How do you see the landscape now compared to where it was a few years ago? Maybe here in Australia, first of all.
Yeah, look, maybe if I can give you kind of an example. I had a client that came back to me just a couple of months ago, just turned 65 and was going into putting his self-managed super fund into retirement mode. Now, back in 2017, he actually came into my office. He was recommended from a family member of his. He'd had a good advisor, balanced portfolio, retirement plan, but he felt that there was something missing in his portfolio, and that was Bitcoin. Now, what he said, he went back to his advisor and said, "Can you help me?" And the advisor said, "Look, I can't. It's too volatile. It's too risky, it's too unregulated," and sort of pushed him back. And he came to me and said, "Look, how can you help me?" Now, the thing that was interesting back then is you didn't have access to ETFs. You had access to exchanges. Self-managed super funds was, a challenge. I actually managed to acquire digital assets in my self-managed super fund in 2017, and sort of with my accounting skills was able to break down the kind of pathway. I helped him get those assets into his self-managed super fund. But the thing is, he couldn't get advice back then. And today, everything has changed around access to markets. But one thing that hasn't changed is getting advice, personal advice, traditional advice. A licensed advisor sits down with you. They have a quality conversation. They understand your risk profile. They understand what you can tackle. That hasn't changed for digital assets. and we've got new regulation that's coming out, which I think will provide a little bit more clarity. But there's many risks in this sector that still are unaddressed, and I think that needs to change in order to get that adoption further up the adoption curve. I think that the adoption has got to a point where you've got inquisitive people looking and happy to do due diligence on products, but there's always that chasm, and that chasm and moving up the innovation and adoption curve really needs advisors to be sitting alongside. And I'm really hopeful that the clarity of legislation that's coming through will give the investors what they need to better invest in this sector.
Yeah, and also give the advisors, because digital assets or traditional assets has good and bad advisors, and what the customer needs, whether it's in SMSF or retail personal advice, wholesale advice, they need a good advisor. And if the customer wants access to product that happens to include cryptocurrency, then the advisor needs to be able to do that and be sufficiently informed and educated to do that. And I think that certainly doesn't sit with a lot of advisors that we talk to. We have a number under our own license here at Open Markets, and obviously we're a gateway for hundreds of other advisors to trade traditional markets, predominantly equities. But we are getting increasing demand from that group for cryptocurrency liquidity. So that now is firmly on our product roadmap, because the reality is the sentiment amongst the broader community here in Australia has changed significantly in the last 12 months. So the advisor community needs to be able to act on that with regulatory clarity.
Yeah, I agree. Look, you touched on education there. I think that's one of the big barriers, that there's not enough education in the marketplace to support advisors on that front. And I think from a personal advice perspective, the one big thing that's missing is risk profiling. I mean, traditional risk profiles, they look at a person's risk and they ask questions like, how would you feel if your portfolio dropped 15%? 15% drop in crypto with the volatility could be yesterday, Tuesday, which was a pretty bad day on the markets. And so we've actually had to build risk profiles that go further into understanding the psychology behind somebody, what their capacity is to manage it, how long they can withhold things, what their time horizons are. And sort of, I think when you get that full engineering report of an investor in a more detailed manner, you can actually start to allocate safely and securely and compliantly, so that you've got all the audit trails in place for an ASIC, an AUSTRAC or an ATO question. But you can actually put a better portfolio together for a client that's responsible allocation towards digital assets. And that's what we're focused on, to try and build that pathway through.
Yeah, so if I understand that right, what you're saying is this is a more can be a more complex asset class, let's call it, than say traditional financial instruments, equities, bonds, fixed income. So your fact find process has to reflect that, and is in fact much more detailed, which should be what the regulator wants to see and hear. So it allows you to better respond to the client's needs. Okay, I like that. Exactly. And so question. So I think you touched on superannuation before, and I personally feel that a few years ago, if people were talking about crypto in SMSF, there would be a few faces pulled in the room. You said you were there in 2017, but we're hearing and seeing a lot more of that today. So, in fact, Open Markets, we just partnered with one of the world's leading exchanges. I probably won't just name them now. They're coming under our license for super for a period of time, whilst they're in the process of obtaining theirs from ASIC. And this is a really growing segment at the moment, I think, from, I suppose, the demand of the customer base in SMSF. So tell us a bit about what you're seeing and how that's growing.
Look, I think self-managed super funds have been the bulk of our clients for the last 8 years. They've wanted access, and we've given them access via a regulated wholesale-only investment fund. And so that's given them comfort. It's given their auditors comfort, and so forth. But like I said, I invested direct into in my self-managed super fund into digital assets way back in 2017. And there is a compliant pathway there to show that there's no commingling of assets, that you've got the custody right on that side, that it's definitely separated for the fund, and you've got audit trails all the way through. So that has been done, but certainly you've got to find the right auditors as well that have the capability to understand it. I think this is a growing market. I think I think the number's now more than 3 billion in self-managed super fund assets are invested into digital assets. That's only going to grow. We've seen some of the big players move towards taking allocations. AMP came out last year and made an allocation. I think when regulation comes in, that is what self-managed super funds and also the large superannuation companies are really looking for. It gives them clarity to act. And up until now, look, we've got three groups. We've got AUSTRAC, we've got ASIC, and we've got ATO. They've all got different lens, different mandates, and to be honest, they've actually got different definitions of what a digital asset is. So it makes it very hard for advisors to recommend, knowing where their obligations start and end. And I think that's something that will change with clarity in the regulation coming forward.
Yeah. So there's a question that I'm going to hold myself back on because I'm dying to ask you, but I'm not going to do it. I was going to ask you what the investment returns are in that fund from 2017 to today, but we'll leave that maybe for off record. But numbers are going around my head and I'm thinking you might be buying lunch. One of the things that we're very, very interested in at Open Markets now is a dramatic change. We move away from cryptocurrency in portfolios for a moment and just think about the big shifts that we're seeing around digital assets more broadly. So when I say that, I think about tokenization of real world assets and the use of stable coins to enter that market. Maybe just give us your thoughts on that for a few minutes, because it's moving so quickly at the moment, and certainly at Open Markets, we're very, very interested in this space.
Yeah, I think more and more treasuries are looking to allocate it two directions, one from a strategic and the other one from an operational perspective. Operational is where you talk about stable coins and just the ease to move value between counterparties very seamlessly and easily. And the fees, let's face it, the fees are a lot lower as well. And then from a treasury perspective, this is growing. We've seen so many launch on the NASDAQ. We're seeing Digital X in Australia and others starting to do the same as well. But what we need to really look out for is how they're managing those assets. What are they doing with those assets? Like, you can get a pretty basic yield from doing all sorts of activities with the assets, but where you're starting to leverage, I think this gets concerning, and it's really going to come down to very professional management to determine that they're not going to blow themselves up through that period. But look, we're also seeing that rise in interest in execution as well. I think execution, as you know, goes one way, and it gets commoditized and comes down pretty quick in terms of the pricing structure. So you can get some pretty tight margins and low fees now. So I think that's one element, but certainly the other element is how they're managing those assets in their treasury.
Yeah, very good. Well, look, Ben, I think we're coming towards the end of this. Maybe if I could just finish with one last question for you, the difficult one. We've seen a lot of volatility. For those listening, today's the 19th of November, and we've seen BTC drop. Where do you see it this time next year? $1 million question. Yeah,
look, I actually have given up trying to look at a crystal ball in this sector. I think if you've been in it long enough, look, it could go up and down in any given day. Look, I think underlying the fundamentals are extremely strong right now. We've got the regulation and the push in the US. I think they're getting the stable coin growth is going to increase. I think a lot of traditional markets are going to connect in. I think it's going to open up for portfolios. So for me, the fundamentals are extremely strong. And I think if you're familiar with what your time horizon is on your investment, the shorter your time horizon is with a volatile asset, the more stress you're going to carry. But if you're taking a long-term approach and zoom out, whether that's 1, 2, 5 years, I think there's no doubt that adoption of digital assets is coming. Their friction is a lot lower than traditional assets, moving of value. I think there's so many positives that can go to so many people globally, and that's what we need to stay focused on.
Yeah, agreed. And as I said before, certainly front and center of our minds as we move into 2026 with our strategy around digital. And we've got some really exciting things coming as we move forward into that. And Ben, it's great to see businesses like Alpha now stepping into that advice space, but professionals that really understand how to deliver that content and advice to people that are coming and needing it and asking for it and doing it in a compliant, regulated way. So great to have you on today, Ben. I really appreciate your time, and we'll catch you soon.
Yeah, thanks, Dan. Thanks for your time.